In today's video, I'm going to be breaking down my whole A to Z prop firm approach in 2026, the challenges I decide to take, the risk I decide to take on them, and how I go about giving myself the best chance, the best probability of passing these challenges. So stay tuned for this one and I hope you enjoy. All right, so we're basically going to be kind of going over all of these challenges, what I kind of value the most, how I go about choosing the right prop firms, and then we're going to be breaking down step by step the approach that I take to pass these challenges and, to get payouts from these firms. So choosing the right prop firm, this is kind of the number one most important thing right now, because prop firms are shady, right? We know how the model works. The model works from challenge fees. So failed challenges, that's essentially your payout. So we want to choose the most, for me anyway, I want to choose the most trustworthy firm where I'm the most likely to get paid out. I don't want any of these dodgy firms that are going to question my payout and try and get their way around it. So the way that I do that and the way that I look for these firms is by using a platform called Prop Firm Match. Now, I've been using Prop Firm Match for quite a number of years now, and it's kind of my go-to for basically breaking down all of these firms. So the really nice thing about Prop Firm Match is you have so many data points, and I'm a very data driven individual, so I like the fact that there's so much data on these firms. Now, the main points that I look for is simply reviews, right? I think that's really the biggest one, the reviewed from users. So we can look at reviews from funded only or paid out only, and you can see the reviews from people that have actually been paid out from these firms. Now, the Fivers, E8, Alpha Capital, these are typically my top three. Obviously, FTMO are in there as well. Where are they? There they are. So FTMO are up there as well. But the paid out only, the Fivers, E8, and Alpha Capital, these are the ones that I want to focus on right now. So with that being said, I will go to these firms. You can go on their pages. You can look at all of their rules. Again, I will read the FAQs on the firm's website just to double check, just to make sure you're actually in line with everything. Then on Prop Firm Match, obviously you got a bunch of codes as well, where you can get some nice discounts. What's also really nice about Prop Firm Match is you can go to your analytics section, which gives you a breakdown of the purchased challenges, the payouts that you received, and kind of gives you an overview of your pass rate, your active challenges, all your money invested, money in, money out, all this good stuff. And it gives you a nice overview of actually if you're making money or not, right? And the ROI of your investment, because ultimately this is a business where we are trying to extract money, right? We're trying to make money here. This is not all fun and games. So this is a really nice tool that I'm going to be starting to use. Obviously, I've just got an example here on E8 market. So this could be nice for my 200K once I get that funded. Or if I get that funded, maybe I will, maybe I won't. So Prop Firm Match is a really nice tool for doing this. So once you've kind of chosen the right firm, or once you have a list of firms that you want to focus on, your next task is to really understand your edge. Because if you don't understand your edge, it's questionable if you should even be taking a prop firm challenge, right? Most people take challenges and then they just trade based on what they think. They try to trade discretionary, and they very rarely pass challenges. So you really have to know your data. You really have to know your edge. And, when you understand your edge, when you understand all the analytics and the data points of your edge, then you can kind of really dissect how you're going to be going about challenges. So next is then your bankroll. So how much do you have to spend on these challenges? And obviously this is going to vary from each individual, and your edge expectation is really kind of gonna come into play here, because maybe you only have one trade a month. Say you're a swing trader, you have a couple of trades a month. whatever. So then maybe does it make sense to buy more challenges? Probably not, right? Because if you're swing trading with fewer positions, maybe you have a higher strike rate. So possibly you'll be more focused on just one challenge at a time. Whereas if you're active day trading, you're probably going to want to split up your allocation into slightly smaller accounts to again give you the highest probability and the highest chance of passing these firms. So your bankroll is really kind of going to decide in combination with your edge, what prop firms you buy, how you approach that prop firm, the risk that you take, and all of these things in between. So for me personally, my edge expectations are about 45% with an average risk to reward of just over 2R. So for me, I am quite happy to go for some larger account sizes. I don't necessarily break my allocation up into lots of little accounts. So I'll likely go for a couple of 50Ks, a couple of 100Ks, or maybe just a sole 200K at most. That then allows me to risk what I'm comfortable with and what my financial situation allows. So if I'm looking at a two-phase challenge, which most are nowadays, but I feel like we are transitioning to this kind of one-step approach in the industry. So if it's a two-phase challenge, I'll likely risk 2% on the challenge. Right? If I start going into drawdown, I may cut my risk to 1.5, but most often I'll just stick at 2% risk. Then if I pass that, again, I might not pass that, but if I pass that, my risk goes down to about 1.5. And again, maybe I will reduce that to 1%, depending on the environment, depending on kind of where I am and my edge, how it's performing. Again, maybe I pass that, maybe I don't. If I pass that, I stick to 0.5% risk to either secure a refund on the firms that give you a refund, or just to secure a payout, just to basically get my net cost to break even. Because we're running a business here, we want to get to break even as quickly as possible. Then everything else is just profit. It's just topping on the cake. I'm not sure if that's a saying, but anyway. So that's the approach. Then once you get your payout, tax first and foremost. Unfortunately, the tax man wins. He always wins. So put some money away for the tax man. Next up, reinvest that money, right? We're trying to grow the business here. We're trying to grow our income. So invest in more challenges, invest in bigger challenges. You want to get this snowball effect going, because things pick up quickly when you can really get that wheel turning and actually start receiving consistent payouts. And then things just escalate, and that compounding effect really takes effect. So that's kind of my prop firm approach in 2026. Again, pretty simple stuff, but really the main important focus is choosing the right firm, knowing your edge, and that's really all you need to do. Because if you have a good edge, if you have a consistent edge, and if you have the right firm, you can quite easily get payouts. You know, people very often overcomplicate this prop firm approach, but really it's just about doing the same thing over and over again, applying the same edge consistently and playing the probabilities game. So focus on your edge, focus on calculated, disciplined risk management, and you'll actually get funded. All right, so shout out to Prop Firm Match for this video. If you do want to check them out, there'll be a link in my bio. Obviously, it's an affiliate link, so I will get a bit of a kickback, but you'll also get a discount as well on your next Prop Firm account purchases. Enjoy the rest of your day, and I'll talk to you all soon.